So what if I told you guys that in the United States of America, one of the biggest lies as far as funding is concerned is the fact that you need a bank. Welcome to the channel. My name is Ben Kofi, aka Credit Kofi. I teach business owners in the United States of America how to gain funding, or moreover, I teach you how to gain access to the money, the moolah, the bling, and the ka-ching. Let's get it. In the United States of America, one of the biggest lies as far as funding is concerned, funding small businesses, is the fact that you need a bank, okay? Completely dead wrong. You do not need a bank. And in this video, basically what I'm going to do is I'm going to go over how you guys, entrepreneurs, can go out there, gain access to cash in the way of funding, of course, without using a bank. Let's get it. Now, banks, in essence, traditional banks, they are like dinosaurs. They move slowly. They do take calculated risk, but they understand and they realize that small businesses are a risk because of the fact that they have statistics on how many businesses fail in America and how many businesses succeed in America. Now, this is where things like credit unions step in. Now, credit unions are basically, they're not driven in exactly the same way as banks are. Banks are more driven by private owners, private investors. They're driven by profits, whereas credit unions are more community driven, okay? And because of the fact that they are more community driven, they tend to give out better benefits for guys like you, entrepreneurs. So some of the benefits of credit unions or seeking out a credit union in the United States of America is because of the fact that they give out higher credit limits, they give out faster approvals, they give out more money, and their restrictions or limitations to gaining access to the cash are basically broader. So you're more than likely to get approved from a credit union as opposed to a bank. So over the next few minutes, basically what I'm going to do with you guys is I'm going to teach you how credit unions basically operate and how they're secretly and generously giving out a ton of cash to people like you, business owners. So why are credit unions different? Now, banks in essence are basically built to reject you. You have underwriters in there basically put in position to protect the bank's money, to say no to people like you, business owners, whereas credit unions, on the other hand, they are built to fund you. Now, you may be asking why. So here's the deal. Banks are for-profit machines, okay? Their shareholders basically demand maximum returns, okay, which basically means they have to play defense, okay, rejecting a whole load of risk as far as businesses are concerned. But credit unions, on the other hand, they're basically non-profit cooperatives, okay? That basically means their goal isn't to squeeze you or to make the most money out of you. They're basically there to serve you. So credit unions, they exist for members of the community, moreover, whereas banks exist for Wall Street. Now, this is one of the main reasons why credit unions basically approve more businesses, more small businesses, and give you guys lines of credit, loans, etc., higher limits, etc. Whereas often you're going to be hit with denials, crushing denials by banks because they've got more regulations and they have more hoops to jump through. The funding advantage. Now imagine going into a bank and you're going in looking for $50,000, okay, in a line of credit, only to be laughed at. Now imagine walking into a credit union and walking out with $100,000 instead. Now that might sound insane to you guys, but this is the reality of dealing with credit unions, because this kind of thing happens every single day in the United States of America. Now, credit unions, basically, they pull fewer financial reports. They rely on relationship banking, okay? They basically give out higher unsecured business credit limits. Now, sometimes they even double the amount that traditional banks give out. Now, also on top of that, their approval process is faster with fewer hoops to jump through because of the fact that they don't operate under so many rules and regulations, and their modality of accuracy doesn't have to be as refined as that of a traditional bank. And here's the kicker, because of the fact that credit unions are smaller, they tend to pay more attention or give you more of a hands-on approach, okay? They listen to your story and understand your story instead of just running you through a rigid algorithm, which is what bigger, more commercialized banks tend to do. So how do you actually find the right credit union for you, okay? How do you know that they're gonna give you exactly what you need? Don't worry, I'm about to show you how. Finding the right credit union. Now, not all credit unions are built the same, okay? Some will act really, really stingy and won't give you exactly what you need, whereas others will work with you and basically give you hidden gems that you're not going to find in other places. So it's essential that you pick the right credit union. So step one, you need to look at credit unions that specialize in business funding. Okay, and there are many credit unions around in your state that are local, but don't be fooled. Okay, they are basically sitting on millions and they are dying to give it out to entrepreneurs like you. So step number two, there are resources out there that help you to find the right credit union, and not only help you to find the right credit union, help you to find a credit union that is near you. So tap into ibank.net. Now ibank.net is basically like a matchmaking system for entrepreneurs who are looking for lenders. Now all you need to do is filter by state, filter by lender, filter by type of credit union that you're looking for across America, and ibank.net does the rest. And here's the thing, once you know and understand how to pitch yourself to these credit unions, this is when the approvals start to roll in. How you can treat a credit union as opposed to how you treat a bank in order to get what you need. So credit unions, they value relationships, okay? Walk in with the mindset of the fact that you're partnering up with this bank, because in essence they are going to give you money. They are a business partner of yours, so they should be treated as such. Now, mainly what they want to see is they want to see that you're serious, okay? You're serious, you're professional, you have a plan, you have a future. Show them the fact that you know how to manage your money on the personal side. So basically, clean personal credit, proof of revenue, okay? Most importantly, okay, they want to see that you're a committed member of the community. Once they see that, it's all good. Now, going back on the topic of relationships, now a relationship doesn't only mean going into the bank to meet members of staff, etc., etc. It also means increasing bank rating. Now, bank rating is how your bank account or your checking account is measured over the course of 90 days, okay? How much money you have in the account and how much money is flowing in and out of the account. Now, if you subscribe to this channel, I'm going to go over bank rating and how bank rating can basically, if you know how to use it, how you can use it to your advantage to get your higher limits and get more money out of the credit union. The numbers game. So here's the numbers for you. The average limit on a business credit card is around about $15,000, but with a credit union, it's around about $25,000 to $50,000. And check this out, those limits, the $25,000 to $50,000, are usually given sometimes on the first approval. Now, because of the fact that credit unions have lower overhead costs and the fact that they're member driven or they're owned by members, they can basically pass those benefits on to their members. So, and the way in which they pass those on to their members are bigger approvals and lower interest. Now, on top of all of those benefits, they even offer unsecured loans up to 6 figures. Now, sometimes banks, your regular average commercial banks out there in the United States of America, would basically laugh you out of the building, even if you approach them on some of those things that a credit union is basically going to give you with ease. Now, here's the great part. You can be strategic. I'm always talking about strategy on this channel or on my shorts, especially on TikTok. Using strategy, you don't have to be a member of just simply one credit union. You could be more strategic. You could join several credit unions with several who are under the banner or report to several different credit bureaus, so Equifax, Experian, TransUnion, and you can stack your cash, hiding your inquiries. Now, when you start to stack funding, you're basically getting, let's say, $10,000 from this credit union, $10,000 from this credit union, and $10,000 from that credit union, $30,000, and all in all, because of the fact that you're using strategy, one is with Experian, one is with Equifax, and one reports to TransUnion, you're stacking the cash, which means more cash to invest, which is the likelihood, if you play your cards right and invest right, better and higher returns.